Hello, good afternoon. Welcome to our Helping Teachers Invest Wisely Retirement Investment Planning through 403B and 457B plans. My name is Michael Drulis. I'm Executive Director for the New Jersey Coalition for Financial Education. Just want to tell everyone to make sure that you have your speakers on, and this event is being recorded. So Ryan, is our guest arrived? Has our guest speaker arrived?
Yes, he is. Mr. Barry Simmons is here.
Wonderful. Well, great. Well, I'm going to turn over the program to Ryan to MC today's event. But I just want to, first of all, just welcome everybody. Thank you for joining us. Know that this event is recorded and will be available in our extensive archive of important webinars, helpful to those who are looking for financial literacy. But most important, the coalition had a tremendous meeting with the state treasurer, our last meeting in May, where we gave the state treasurer an award for her work and the governor's work on providing a statewide institutionalized financial literacy resource. And we're just so pleased to be together again. So Ryan, I turn it over to you.
Thank you, Michael. Thank you for that introduction. And I wanted to quickly introduce myself. I'm Ryan Berger. I'm the Assistant Executive Director of NJCFE. I wanted to also thank everyone for being here and to thank Mr. Barry Simmons for joining us today and sharing his expertise with our members. I just wanted to briefly thank our premier sponsor, which is, of course, Affinity Federal Credit Union. Because of their sponsorship, we have a full-time presence and we have the ability to host events like this at no cost to our members. Affinity is a full-service financial institution, member-owned, community-focused, with a mission to nurture financial well-being of their customers. Affinity is the largest credit union headquartered in the state of New Jersey, proudly ranking in the top 2% of all credit unions in terms of asset size. The Affinity difference is about people helping people on a deeper level and understanding, to help people achieve their unique dreams and make it a reality. In that way, Affinity and NJCFE share a common ethos as it relates to helping people be financially successful through support and education. So again, we wanted to thank Affinity Federal Credit Union for continuing to be our premier sponsor and continuing to bring these great resources to us.
Ryan, I think it's also important to note that Grant Gallagher, who is on our board and is on the executive leadership team at Affinity Federal Credit Union, is our board secretary, and we're glad to have him here with us today as well.
Absolutely. We want to thank our other events sponsors as well: Raritan Valley Community College, Jumpstart, which we are affiliated, Stockton University, and want to thank every person that has given a donation, big and small, to us to help keep this great organization going. Wanted to thank also, of course, our executive leadership, our chair, Kimberly Cole, vice chair, Patricia Burhow, treasurer, Tracy Rimple, our secretary, Grant Gallagher, as was mentioned, other board members, Scott Cohn, and immediate past chair, Mary Ann Avenko, and of course, Michael Drulis, our executive director. And so the way we are able to provide these free events to our members is by people who are volunteering their time and donating any amount they can to help us. We ask that you make NJCFE part of your regular giving. Our donation program accepts amounts of any size, and all donations help us support our cradle-to-grave statewide charge of improving financial literacy to all of New Jersey residents. You can go to our website, www.njcfe.org, find out more, see our past recordings, our past webinars and events, and of course, be on the lookout for future events, and check out our donation page. So just wanted to briefly review today's agenda. We just did the tech check and the welcome and opening remarks. We're going to be passing it along to our guest speaker, Mr. Barry Simmons, soon. I want to mention that he will be giving a presentation, and during the presentation, if you have any questions at all, please make sure to put them in the chat. The chat is open for questions or technical concerns or anything at all. I want to make sure that you're able to hear and see everything that's going on. And I will be reading off the questions at the end. So we'll be saving all questions for the end. But in the meantime, when you think of a question, even if it's in the middle of the presentation, put it in the chat. I'll make sure to see it. I'll make sure to read it at the end. And afterwards, it's not mentioned on the agenda, but we will be holding of course, our Amazon gift card giveaway. For one lucky participant will be receiving a $50 Amazon gift card. Thank you. All right. So without further ado, I'd like to turn it over to Mr. Barry Simmons, who's our Regulatory Counsel, Division of Examinations for the U.S. Securities and Exchange Commission, SEC. As Regulatory Counsel, Mr. Simmons has provided legal assistance to teams conducting examinations, registered entities, including investment advisors, mutual funds, exchange-traded funds, private funds, and business development companies. He has worked in the past for New York Life Investment Management, New York Life Insurance Company, and received his law degree at George Washington University Law School and his LLM in Securities and Financial Regulation with honors from the Georgetown University Law Center. So, Mr. Simmons, without further ado, I'd like to turn it over to you.
Great. Thanks, Ryan. Can you hear me?
We can hear you just fine. Yep.
Okay, great. Let me share my screen.
Absolutely.
Okay. Let me go to slideshow. Beginning. All right, slideshow. There we go. Can everyone see the screen okay?
We can see it fine, absolutely. And of
Great,
course, if
thank
anyone
you.
can't hear anything, please put it in the chat, and I'll make sure to inform you, Mr. Simmons.
Great, thank you. Good morning, everybody. I'm glad to be here today. Glad to help out in any way I can, help out you teachers that you learn about retirement investing. So, what we cover today? All right, we're going to cover the overview of the SEC, saving for retirement, 403B and 457B plan basics, investment choices and fees, preventing fraud, before you invest, ask and check, and resources. Now, before we get going, let me give the usual disclaimer. The Securities and Exchange Commission disclaims responsibility for any private publication or statement of any SEC employee or commissioner. This presentation expresses the author's views and does not necessarily reflect those of the commission, the commissioners, or other members of the staff. Now let's begin. All right, what is our mission? Our mission is threefold. One, to protect investors, mainly retail investors. Two, to maintain fair, orderly, and efficient markets. And three, to facilitate capital formation. We are, as you might guess, we are the referees of the industry. We make sure everyone's playing fairly and all the retail investors are protected. All right. If you learn nothing else for this seminar, know this: investor.gov and sec.gov. Between those two websites, you will have enough information you will need to make a good investment decision. Both of those websites have a treasure trove of information. Okay, next section, saving for retirement. Now here, this is very important for people who don't understand about retirement. If you have a goal of, say, $500,000 and you want to start saving for it, it's always best to start early when you do this. So in the chart here, you see on the right side, if the goal is $500,000, if you're 25, you need to put away $20 a month. If you're 55, you put away $3,000 a month. So you can see, saving early and often, you come up way more ahead at the end. Here's another chart that shows something similar. Investing early. From the age of 18 to 27 on the left, this person spent 10 years contributing $2,000 a year. So at the end of 10 years, she has $20,000. At 7% interest, by the time she's 65, she would have amassed $337,774. There's a person on the right who started later at the age of 31, but invested continuously for 34 years, was able to save $68,000, and at 7%, he amassed $256,518. Almost $100,000 difference just by investing early. Started at 18, ended at 27. The money sat there and just continued to accumulate over time. Okay, the state teacher retirement system has two types of plans: defined benefit plan, which is pension plans, and defined contribution plan, which are 403B plans and 457B plans. Why invest in these plans? Invest early for compound interest, supplement retirement income, and you can contribute on a pre-tax basis. Though you can also contribute on a post-tax basis using the Roth program. I'll get into that in a little bit. Now, here's what we hear from people who don't invest in 403B plans. I have a pension, I can't afford it right now, I don't know enough about it. Well, I can help you with number 3. I can't do much about number 1 and number 2. Okay, what are they? 403B, it's a retirement savings plan for public school employees. 457B, a retirement savings plan for state and local government employees. The traditional and Roth versions are available for both. Traditional is pre-tax, Roth is after tax. Now, if it's an ERISA plan, it's subject to the Employee Retirement Income Security Act of 1974, but only if they are sponsored by a private tax-exempt employers. Otherwise, it's non-ERISA. They're sponsored by state and local government employers and public school employers. Who offers the plans? Your employer or administrator may offer both 403B and 457B plans. Just contact your employer for more information about the plans, and they'll give you the information you need to make an investment decision. You can contribute. Employees of public school systems who are involved in the day-to-day operations of a school. So certificated staff, classified staff. Okay, this chart shows the similarities between the 403B and the 457B plans. Who's eligible, contribution limits. So right now, I think the information is a little outdated. I think for 2022, I think it's 20,500, and the 50 plus catch-up is $6,500. So you can invest up to $27,000 each year. And I believe if you have both plans, you can do both plans up to the max, $54,000. So not many people do that, but you can. Okay, let's go through some of the differences. All right, distributions while still employed, only in a hardship of under the age 59.5, or plan 457B, unforeseeable emergencies. Distribution without tax penalties, age 59.5. 457B, it's age 72. Okay. I'll leave it on the screen so you can kind of read through it if you want to read through it. I think a lot of people would go for the 403B. Tax advantages. Okay, the traditional one, as I mentioned earlier, is before tax contribution, which lowers your taxable income. So at the end, when you're 65, you start to take the money out, you're taxed at that point, after withdrawal. The Roth plan is after tax contribution, no change to taxable income. And here's the beauty part. You're not taxed at withdrawal. So let's say you put away $20,000 in after-tax income, after-tax contribution, and it grows to say $50,000. That $30,000 difference, the amount that it earned, is not taxable. because the initial 20,000 was already taxed. It's quite a nice benefit. Okay, more differences. Tax treatment of distributions, below is allowed to other plans. So you see, you have a lot of flexibility here. Okay, what are my investment options for these types of plans? You've got mutual funds and annuities. And that's pretty much it. Mutual funds and annuities, but it's a wide array of mutual funds and a wide array of annuities. What's a mutual fund? A mutual fund is a pool of money where an investment advisor takes money from all different investors and basically goes shopping for investments, securities, stocks, bonds, short-term debt, money market instruments, and so on. We regulate mutual funds. Mutual funds, hedge funds, exchange-traded funds, private equity firms, business development companies. We regulate those entities. These are different types of mutual funds. You got bond funds, stock funds, balance funds, which are bond and stock funds, target date funds, which are time horizon funds, where if you have a 30-year time period for the fund, the first years, initial years, they'll be investing in equities and stock because you have a much more longer time horizon. The later years will be more conservative to the bond funds, so we'll just switch over the time period. And you have money market funds. What's an annuity? An annuity is the contract between you and the insurance company offering the annuity. There are three basic types of annuities: variable, fixed, and indexed. Variable, fixed, and indexed. Variable annuity, your payroll deduction is directed to different investment options, usually mutual funds. So if you invest in a variable annuity, most likely will be investing in a mutual fund. The payouts vary depending on how much you put in, the rate of return on your investments, and expenses. Again, we regulate variable annuities. We do, the SEC. Fixed annuity promises a minimum rate of interest and a fixed amount of periodic payments. Index annuity combines features of securities and insurance products. The insurance company credits you with a return based on the stock market index, such as the S&P 500. Now, fixed annuities and index annuities, we do not regulate. They're regulated by state insurance commissions. Vendor. Now, when you go to your administrator and they give you a sheet that has a list of the vendors that you can use to make your investments, you need to look at each vendor on that list and see if that vendor might be right for you, which is, it's a lot of work. Now, we'll get into this in a few minutes, but that's what you need to do because the administrator is not a fiduciary. That's not how it works in this industry. The administrator is not a fiduciary, so they don't have a responsibility to make sure you make the right choice. They give you the information and the choices, and you see the usual suspects. I mean, you may see like, AIG, Equitable, Lincoln Financial, MetLife, Pacific Life, New York Life. You may see some other names as well, so maybe some small names. Maybe even an administrator's brother-in-law. It's hard to say, but you got to go through the list and see what makes the most sense for you in terms of which one you want to talk to, decide if you want to invest with that vendor. Each product that they offer may have one or more investment options for each product offered. The fees may vary. And here's where it gets interesting. What is an investment fee? Fees and costs for investment products and services may be charged to you when you buy, while you own, and when you sell. These are a big thing with these products. Fees and expenses can be different from investment product to investment product. Investment products with higher fees must perform better than investment products with lower fees to generate the same returns. And the difference may be minimum, but over time it can be quite large. As you see with the next slide. Okay, this next slide shows an example of someone who's investing in 2013 until 2033. Okay, so The green line shows returns with a 1% annual fee. The blue line shows returns with a 25 basis point annual fee. By the time 2033 hits, this much each one is earned. As you can see, the difference between 210,000 and 180,000 is $30,000. Now that's a 75 basis point difference between the fees. $30,000 over 20 years. So it does add up. It does add up. Other fees for mutual funds. Okay, you've got transaction fees, commissions, markups, sales loads, continued deferred sales loads. What that is, that's a fee where the broker is paid the commission all at once, at one time, but then you pay the commission over a period of time, say 6 or 7 years on a sliding scale. So as you get closer to the 6th or 7th year, you're paying less, and you're done by the 7th year. Okay. However, if you leave the fund and you cash out, and let's say in the 3rd year, you have 3 more years to go, when the CDSL, they'll take that out of your proceeds that they send to you. Okay, so watch out for funds that have CDSLs. Okay, ongoing fees. You have investment advisory fees, annual operating expenses of the investment. Okay, about variable annuities, administrative fees, underlying fund expenses, which was on the prior sheet, sales load charges, transfer charges, surrender charges. That's just like the CDSL from mutual funds. There, they pay the broker right up front, right away, all that he or she has earned on the transaction. You pay it over time, let's say 6 to 8 years, right? So now if you leave that investment, let's say in the 4th year, you still have 4 more years to pay for that broker who got paid all at once at the one time. So they'll take out those expenses and reduce your proceeds. That's why you really have to stay in for 8 years to know to pay it all off. Or if you leave early, you lose that money. So this, not all investments have the surrender charge or CDSL, but the ones that do, you should know about them. Remember, fees and expenses can take a huge part of your returns. Be sure you understand and compare the fees you'll be charged. You can save a lot of money in the long run. Remember that $30,000 difference on our last chart we saw. Over 20 years, that's a big chunk of money. Okay, I can't do the presentation, but I'll at least tell you about beware of fraud. Okay, these are some of the red flags of fraud. Karen Sampson's annual bonus and misplaced trust afforded her investment professional the very finest bubbles. It happens all the time. We see it at the commission. We watch for that. Okay, so I want to talk about preventing fraud. Some of the tips. They say securities are sold, not bought, which means someone has to sell the security, which means that an investment professional is going to try to sell the security. So you want to research that financial professional, find out who he is or what they do and how long they've been doing it and so on. You also want to research the product that they're trying to sell you. In this case, it might be a variable annuity for your 403B plan. You want to research that product. You want to be aware of common persuasion tactics and red flags. Be alert to common investment scams. So for example, if the salesman says, okay, it's guaranteed returns, might be a little suspect. If he says, he tries to pressure you to send money now, well, your spider senses should be tingling. If he says, offers you a free lunch or a free dinner, there's no such thing as a free lunch or a free dinner. They're going to want you to sign the line that is dotted at some point in the evening. Everyone's buying it. Better get it now before it's gone. That's always a very popular one they use. Try not to fall for that one. Beware of unsolicited offers. And also, if it sounds too good to be true, it probably isn't true. Before you invest, ask and check. Okay. All investments have risks. Understand them before you invest. Ask questions. Again, the investment product, the sales agent. Do your own research. Again, you have the list of the vendors that the administrator is putting before you. You don't know how companies go on that list, but they're on the list. So you got to do your research. You have to do your due diligence. Is the investment product registered? What fees will I pay? Again, the fees. Is a salesperson registered? How does my salesperson get paid? All relevant questions that you should ask. What fees will I pay to purchase, hold, and sell this investment? Right? What are all the fees related to this account? Is the theme here about fees? Will those fees appear clearly in my account statement or my confirmation? What products can meet my financial objectives at a lower cost, even if you do not sell those products? That's a good question to ask, because if they came in to sell you variable annuities and you're asking about fixed annuities, they may not want to give you that information, but they have to, right? So they know what money they can make on the products that they're trying to sell you. Is there a penalty by sale? Surrender charges, continued deferred sales loads. We talked about those. Redemption fees. Now, redemption fees are fees that you pay to exit the fund, mutual fund. It doesn't go to a sales agent, a broker. It goes to the fund to pay for the fees, the charges for redeeming you out of the fund. It's a one-time fee. Whenever you leave, you're going to be hit with an exit fee. Not all funds charge that, but some do. So you should know about it. Okay, variable annuities. That's, again, fees and expenses. Ask about the different features. Get a copy of the prospectus. Now, you may not want to read the whole thing on a Saturday night in front of your fireplace, but you will want to know certain parts of the prospectus, like the fees and expense discussions. And a good salesman will tell you where to look in the prospectus to find that information. Ask questions if you don't understand. Okay, investment professional. How will you get paid? Commission, fees. They know this. They know exactly how this works before they even approached you. Do you make more money for selling me one product over another? Probably. You know which product it is. You can ask the question. Do you get any other type of compensation for selling me this investment product? Good question to ask. You don't know how the arrangement is set up. How long have you been in the business? Are you licensed and registered with the SEC, FINRA, or state securities regulator? Do you have a disciplinary history with a government regulator or any customer complaints? Another good question to ask. All right? Disciplinary history, customer complaints. So we're going to go to find these questions or find these answers. Investor.gov. You get information on licenses, registration, disciplinary actions, customer complaints, previous employment, investor.gov. You also want to check your employer's 403B and 457B plan documents. Again, it's a lot of reading, but if you go to the sections that talk about fees and expenses, it'll be you'll get to the point easier, faster. You search investment products offered by the vendors in your school district. You search your investment provider or vendor. So you need to reach out to that list and see which vendors you want to consider, maybe 3 or 4, and then see what products they offer. Then ask them questions. Maybe have a list of questions to ask each vendor to make it easier. It's always good to do a side-by-side comparison whenever you can. All right. Where can I research my investment product in New Jersey? 403bcompare.com. This is a good tool because you can compare up to 3 products side by side in terms of whatever kind of metrics you want, fees, expenses, whatever. But it's good to use that. Also, for mutual funds, FINRA has this great fund analyzer. Okay, you can look at the prospectus online using Google or the fund's website itself. The analyzer allows you to compare funds. Okay, so between the live price screen, 403B compare, and the fund analyzer, you can do some really good comparison, and that will save you some time. Here's the fund analyzer. Analyzing comparing the cost of owning funds. Very good tool. I strongly recommend using it. Okay, so variable annuities, know how they work, get the details, figure out how much they cost, read the prospectus. Investor.gov. Again, it contains a treasure trove of information about the salesperson, the products they're offering you, all kinds of additional resources. I was spending a Saturday night reading this, going online, going through this. You're going to be surprised at what you find. Between investor.gov and SEC.gov, anything you want to know about securities or financial regulation, it's there. There's even an investor preparedness checklist to get you ready for your financial future. I'll leave it on the screen to get a chance to kind of read through it. Yeah, checklist is always good. All right, and then on top of that, investor.gov has got a website specifically for teachers. As it says here, this page is for teachers investing for themselves and their families. We also have separate pages for resources teachers can use in classrooms to help educate students about investing, as well as a page created just for students. Investor.gov/teachers. Oh, look at this. SEC.gov/teachers. We have you covered. And then, boom. Secrets to investing. So again, just go to the website, spend some time. You will learn a lot. A lot. I guarantee you will learn a lot. And those aren't enough resources. There's always the Internal Revenue Service. I have to say, I've not spent a lot of time on those sites. There's also the State Insurance Commission and the Department of Labor and Employee Benefits Security Administration. Let's stay in touch. Here's information on the SEC's Office of Investor Education and Advocacy. We have our 800 number. We're on Facebook and Twitter. You can contact your local office, which for those in New Jersey, it's going to be the New York Regional Office, located at on Wall Street, 212-336-1100. Now, I should say, before we turn over to questions, that it is a lot of work, but it's for your future, and you really should do it. You don't have to do it alone. You could do it with a friend. You do it with other teachers, like it's sort of an investment club. You come up with a question you want to ask each plan vendor, and then ask questions about the salesperson and the products. Remember, you want to have the same questions for each vendor, so you can compare and contrast them. So with that, let me turn it back over to Ryan. We'll see if there's any questions.
Absolutely. And again, thank you, Mr. Simmons, for this presentation. I want to reiterate to our the people listening in that this PowerPoint will be posted later on our website, so you'll be able to access all these resources anytime that you need. I wanted to first highlight a comment from Dr. Barbara O'Neill, who's been with NJCFE for some time, who highlights another great tool is the nonprofit organization 403B Wise. Full disclosure, they are a client of mine, and I write monthly guest blog posts for them. But still, another good resource that you can find in the comments about 403B plans. And certainly would want to highlight that. I also wanted to highlight another comment from Mr. Church, Rob Church of Domain Financial Literacy Foundation, who's working on a community workshop program for foster youth and families. We're partnered with Berg and Middlesex CASA to launch a program with our funding partner to train advocates to teach our FitKit personal finance workshops, as well as having DMFLF and our funding partner conduct additional workshops. So just wanted to highlight that two great members of NJCFE. So again, to reiterate, any questions, please put them in the comments. Want to make sure that, taking full advantage of the good guest speaker that we have today. I think I'll start off, if there aren't any at the moment, which is, I guess, to say how often does the SEC see these kinds of scams and frauds, and what can they do about it?
Well, we see them a lot. It's just different types. There's different types of scams. I've given presentations just on fraud, how to avoid fraud, because there's many different scams out there. I mean, by and large, most of the firms are in doing business are trying to do it the right way. It's just that sometimes they try to take shortcuts. And one of the big issues that we find with firms is conflicts of interests that may exist, and they may not disclose them to the clients. So, if they have an affiliate party and they're making money off their affiliate party, and they're not telling the investors that that's what's going on, that's not good. Investors should have all this information about what they're doing with their money. And so it's things like that. You do see the blatant scams every once in a while. The biggest one I think everyone knows about is Bernie Madoff, which happened some years ago. But we've seen others that rise to us, not the same level, but we do see others. We see others out there trying their best to do something nefarious. And so when we find this out because of we have a whistleblower program, and so we hear from whistleblowers. We also hear from our examinations division, which is where I work. We conduct examinations, and what they do is when we find things that are bad, we refer it to our enforcement division. Then they go and look at it and they investigate. You see, we don't have arrest powers. We don't carry guns, any other weapons, but we do have the FBI and speed dial. So we got that going for us. Because a lot of times the firms that are doing these bad things, they've got they're very well funded and they've got very good attorneys, and so we have to make sure we have our facts straight, and that's where the fact finding comes in. And like I said, a lot of times the division of examinations will refer this to the enforcement division because we already we examine the facts. Well, that's what we do. We're boots on the ground. We find out what's going on in each individual shop, and if you see something bad, we'll tell the the firm as well as enforcement, but not always enforcement, but sometimes we will. And so,
All right, actually got a question related to that from Rob Church. Do you find scams are on the rise in this current economic environment?
No, but there's always scams in every environment. Even during COVID, there were scams. There's always people trying to make money and trying to take shortcuts. So it's not that they're scam artists. it's not a prevalence to scam artists out there, but a lot of people that just take shortcuts and like by doing things but not telling the investors who invested with them. So people, the desire to make money is pretty strong out there, especially in this environment. And so people do take, they're motivated to take shortcuts, some of them. Okay, so one of the things that we do at the SEC is when we conduct an examination of a firm, we try to understand the players in the firm, the decision makers, and understand their motivations. That kind of lets us know, that they're likely or not likely to engage in bad behavior. So I wouldn't say there's been more in this environment. It's just a continual stream of people who just don't want to follow the rules all the time.
Absolutely. I wanted to again highlight from Dr. O'Neill that she says there's a great 5-part podcast series from 403B Wise about high cost 403B plans called Learned by Being Burned, where several NJ teachers were interviewed. So this is certainly prevalent and of concern to our teachers and others as well.
One of the things I will say is that in this space, 403B, 403B has been associated with variable annuities because that's what is being sold to teachers, variable annuities. And so the thing about variable annuities is that it's a high profit margin for the brokers who sell them. And that's why the features are very important. So for example, if they have a surrender charge, you got to take note of that. It's important because for the 8 years, your money will be tied up paying for that surrender charge. And again, if they try to exchange you out of it in that time period to put you into something else, that's not doing you a bit of good. It really isn't, because you got to pay that surrender charge when you leave. Why don't you just stay where you are? But sometimes these salesmen really try to push the envelope, especially with teachers, because they know they don't make tons of money, but they can make continual payments. And so this kind of plan might be good for them. And so sometimes brokers try to take advantage of that and sell you things that you don't have to buy variable annuities if you don't want to. But look at that and compare with other programs. See, just to make sure that you're getting the right thing, because the salesman person who's trying to sell you a variable annuity wants you to buy a variable annuity because that's what his commission is based on. That's his motivation, that commission, that continuous stream of money coming from that product, which may not be the best for you. Again, he's not a fiduciary necessarily, but he's not trying to sell your product. So, he's got suitability issues. Make sure that he's selling you the right product for you. So that's why you have to do your due diligence and do your research on this person and the product they're trying to sell you. It may not be the best product for you.
Absolutely. I guess kind of in that same vein, you mentioned that you want to look into whether or not these people are registered to sell these products. And you mentioned a number of different places where they might be registered. Is it important that they're registered in all those places, or is it just one? Or,
no, one doesn't matter. One. If they're a broker, they'll be registered with FINRA. They could be registered with us. Investment advisors may or may not be registered with us. You have certain levels of assets under management that require you to register with us versus require you to register with the state. Okay, so you may be registered with the state, but you don't have enough assets to be registered with us. Okay, for us, you need to have $100 million to register with us. Whereas with the state, it's less than that. So a new investment advisor starting out will probably be registered with the state. Well, on any state he or she does business in, he or she needs to be registered in that state. So if you have to be registered in 15 or more states, you can just go straight to us, the SEC. Because no sense having to follow 15 or more states' rules and regulations. But then imagine them as 15. Anything less than that, you have to be registered in all those states that you do business in.
All right, thank you. I just want to ask if there's any more questions, put them in the chat. But in terms of, you had mentioned at the end to stay in touch. So does the does the SEC put out this kind of materials on a regular basis? Is this something people should be following for their up-to-date information?
Well, this is an outreach program from our Office of Investor Education Advocacy, and so like when I heard about this presentation, I volunteered because I thought it'd be good to provide this service. I go on a few outreach events, and so, but in terms of information, all of our information is on our website, sec.gov and investor.gov, and so that's kind of what we do. We don't just send out PowerPoint slides or anything like that to people, but we have all this information that we can share with you. You can go on our website, give us a phone call to help you. But again, my being here today is part of our outreach program that we provide to people and organizations. That's spoken on high schools and other groups of people, investors, and so on, just to get the word out so people understand what's happening out there.
Absolutely. Well, again, we want to thank Mr. Barry Simmons for spending some time with us today, giving this presentation, sharing this material, and answering our questions. And again, of course, as you had mentioned, if there's, one thing to take away is all these great resources, investor.gov, and the SEC's websites, and that kind of stuff. As I mentioned in the chat and elsewhere, that this PowerPoint slide will be available. All these resources and all these great links will be available for people to check out. And we obviously highly encourage everyone to do so. I also want to mention, actually, I'm going to turn it back over to this PowerPoint. See, okay, everyone can see that. All right. So I just want to mention that in the chat right now is a link. Please go to this Google form and fill out just a brief survey about today's presentation. That way we will know that you attended and that you can receive the continuing education unit. So please do that. We will be posting this later today. But in order for everyone to make sure they receive credit for being here, it's good to fill that out. And we do this for all of our webinars since we are, registered 501c3b. So again, I wanted to thank Mr. Barry Simmons for being here. Thank you so much for sharing this information, this material. And so I think the last thing to do, is we're giving away a gift card. Hey, listen, this is again all thanks to our sponsors, Affinity and our donors as well. So as mentioned before, you needed to have been registered and have attended. So let me pull up. All right. The winner of today's $50 Amazon gift card is Samuel Espinal. I'm probably saying it wrong. Espinal. I do apologize if I have mispronounced your name. I think you're probably putting it in the chat. Oh, well, he's excited. So, however, I apologize if I mispronounced your name, but either way, we will be sending you the gift card. Please email us at I'll just put it in the chat real quick in case you don't have it. info@njcfe.org, and we will be reaching out. So again, thank you to everyone. So we're getting a lot of congratulations in the chat. Everyone's very happy. And again, thank you, Mr. Simmons, for spending some time with us today, sharing this material. If anyone has any questions, so they reach out to that contact info that you put in the slide before.
It's my pleasure.
Absolutely. All right. Well, thank you all so much. And if anyone has any follow-up questions, feel free to email them to us, and that way we can also share that as well and see if we can get those questions answered for you. We have, always be on the lookout at, I'll put this in the chat as well, www.njcfe.org for all of our latest events webinars and our past events and webinars, which are available to be watched and downloaded. So again, thank you. And thank you again, Mr. I keep thanking you, but thank you all for attending. And I hope everyone has a lovely weekend.
Thank you.